Hi, everyone. Welcome to the Real Vision Daily Briefing. With me today is a special guest, my colleague, Ash Bennington. Hi, Ash.
Maggie, you're the high priestess of the Real Vision Daily Briefing. It's a pleasure to be here with you.
You crack me up. We were just joking before we came on that we never get a chance to do that because we're always, if you're on traveling someplace, I'm doing it or vice versa. So it's such a treat to be able to be with you live.
Yeah, it's fantastic.
We're both so busy though that there's nothing festive in either of our shots, but that's just a testament to the sort of grinding nature of these volatile markets right up to the final days. So since it's Friday, the Friday before the holiday, a lot of people are taking off for the holiday week. We thought that we would do something a little bit different and look back at some of the most popular daily briefings this year. And not surprisingly, because we have such an amazing, smart audience, that a lot of these shows and these commenters were also topics that are likely to dominate trade as we head in to 2023. So it feels like we got to start geopolitics, right? This exploded onto everyone's radar with the Russian invasion of Ukraine at the very start of the year, and had so many implications. But part and parcel to that was also China, right? China's response to that, the two of them talking and having a summit. Would they stand with Russia? Would this mean that it would embolden China, who would make a move to Taiwan? I mean, these conversations threaded through so many of the shows. Marco Papik gave us a contrarian view of that when he joined us in August. Let's have a listen.
The world is not bipolar. It's just not. The US and China are not US and the Soviet Union. And because of that, a lot of countries are going to continue to trade with China, which is going to force US to trade with China as well. This is very much the kind of a multipolar world we saw at the end of the 19th and early 20th century, before World War I, where countries like the UK, France, and Russia, which were in a military alliance against Germany, nonetheless traded with Germany, and the trade actually went up. It's because while they were military allies with each other, they didn't trust each other enough to cut off trade with Germany. If France said, okay, we won't trade, the UK would be like, okay, cool, we'll take that trade. That's the world we're in right now. And that's why, the coalition that the US has tried to build against China has not worked at all. Why is this important? It's important because it maintains multipolarity. But it's also important because if China does something rash, it could flip the world from that multipolar setting, which is actually quite beneficial to Beijing, to a bipolar setting. And that's why a military reunification with Taiwan would really not play in China's interest at all. If the West is completely united with Japan, Australia, South Korea, it's kind of game over for Russia and China. They are in no way, not even remotely capable of threatening the West. And so China has no interest in forcing that coalition between Europe and the US. And I don't think they're going to do anything to make that happen.
I love being able to get the contrarian view, but Ash, I don't know your thoughts on this. The other issue is, right, it's not just military, it's economic. I mean, China dealing with zero COVID policy, what that's going to look like. I mean, it's in the headlines even today. This is going to be a huge issue as we move into 2023.
Oh, absolutely. And speaking directly to today's headlines, the reporting coming out of China on COVID is quite sobering. Nearly 250 million people, that's billion with a B, have been infected with COVID in the first 20 days of December. That's according to Chinese health authorities. So, the efficacy of the Chinese vaccines has been questioned. And Bloomberg is also citing low natural immunity to the virus as a factor. And you can wonder, I guess, to yourself or aloud about whether or not the zero COVID restrictions, almost draconian, have now been removed, and now you have these mass protests that were lobbying for this, and so it's a very tricky time there in terms of that and what that will mean and how it's going to play out. In terms of the sort of multipolarity argument, the global fungibility of markets, I thought Papik was very interesting on that point. And I think he's right. China very much appears to be playing a long game in the South China Sea, but it remains to be seen. I think a lot of wild cards being dealt out of that deck, Maggie, in terms of the recent news reporting coming out of China this week.
Yeah, absolutely. And we both know, right, that the information coming out of China is really hard to come by, accurate information. We had some great guests on our Make or Break series with China who were talking about the many challenges that Xi's going to face with his third term. But you hit on something really important, I think, Ash. It's really hard to handicap this, right? It's so hard to know what's going to happen and how it's going to play out. And yet it's going to affect so many markets, whether you're talking about supply chains, reshoring, whether you're talking about energy. And that's the same situation or challenge we face with Russia. What's happening with the Ukraine war, it's just been so hard for analysts, for investors to get their head around. We saw the huge impact that had on energy. One of the things that stayed with me is right in the beginning, as you know, we were both doing sort of geopolitical gas and political gas on the daily briefing because it was the big market moving thing. And during that time, right when the war was breaking out, we caught up with Bill Browder, who of course has tangoed with Putin for years. Putin has an arrest out for him. They went head to head when he Russia took over his company. And jailed the lawyer that was working for them when they're dealing with corruption. He ended up dying in custody. Bill Browder is a very large figure when it comes to Russia. And he talked to us right when it was happening and had some really ominous predictions. Let's have a listen.
Well, so Putin has been a dictator for 22 years. He's been a dictator who's stolen an enormous amount of money from the Russian people. I guess it's well north of $200 billion. That's money that should have gone to hospitals and schools and filling in potholes and roads and so on and so forth. And so after 22 years, people are kind of tired of him. And he's watched other countries around him have the dictators in those countries have a problem. He saw Lukashenko, who is the dictator of Belarus, has been there for a few more years than him, almost lose his position because people rose up after a fraudulent election. He saw the Nursultan Nazarbayev, who is the dictator of Kazakhstan, getting washed out after gas prices went up dramatically and huge protests across the country. And so Putin is a guy who sees risk and understands risk, and he says to himself, he doesn't want to be sitting duck waiting for it to happen. And so what does a dictator do in a situation like that? He digs into the dictator's playbook and he starts a war. That's what this is about. A lot of people say this war is about, NATO enlargement. They say this war is about Ukraine democracy, and those are things that probably upset Putin. But the principal driving factor of Putin going to war in Ukraine and why he's doing it now is that he's a washed out dictator who's afraid of getting overthrown, and he needs to find a way of distracting his people and creating a crisis. And that's what this war is all about. And it's important to understand that, because if you understand that, then we can start to think about what are the tools, where's the leverage to either stop him, slow him down, or change his behavior in some way.
Yeah, and that leverage presumably is money. I mean, that's certainly the tool that has been used from the playbook so far. Does it seem like it's working?
Well, it's important to understand who Putin is as a character, and he's not a guy who ever can reverse. There's no reverse gear in Vladimir Putin. All he can do is go forward. And so when we can never expect, no matter what the sanctions are, no matter what the military situation is, for him to say, I'm okay, ceasefire, let's negotiate. That's just not who Vladimir Putin is. He comes from a sort of prison yard mentality where it's always escalate, 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 show that he's the meanest prisoner in the prison yard. He's ready to take his knife out and shank anyone who comes anywhere near him. That's his psychology. So he's never going to back down or negotiate. And so when we think about what would work and what wouldn't work at this point, now that he's invaded, it's all about making it impossible for him to carry on going forward by depleting his resources. This is a very expensive war, and it requires a lot of money, and we need to impose absolute crippling sanctions. I would describe it as what we need is a total economic blockade, so that he eventually runs out of money and he doesn't have enough money to execute the war. So if you use the car analogy, where he can't go in reverse, he can only go forward. We want the car to splutter out because it's run out of gas. And that is, in my mind, the only thing that's going to stop Vladimir Putin from taking over Ukraine and then further challenging us at a NATO neighboring border like Estonia, Lithuania, or Latvia.
I really remember how chilling that conversation was when I had it, because at the time, remember back in the early part of March, there were some hopes that, maybe there could be a resolution quickly. But as we see, we're turning the corner into the new year. And there certainly isn't any resolution in sight. And there continues to be concerns about
Right.
how far Putin would go. By the way, Bill Browder, he talked to us for My Life in Four Trades as well. If you don't know the background of that story, and his history with Putin and Russia, I encourage you to have a listen to it. I mean, he's written books on it as well. It's absolutely incredible. But this remains such a wild card for everyone, and such, I think, a weight, especially in Europe, Ash.
Exactly correct, Maggie. You follow this story, I think, probably more closely than I do. Sometimes at the end of the year, it's best to zoom the camera out instead of in. I think big picture here, this is the most serious military conflict in Europe since World War II, which is a pretty striking statement. And there's just no end in sight, as you allude to. The European energy crisis is very much an open question in terms of energy supply for 2023. This is a serious humanitarian crisis. It's also a macro headwind for 2023. So again, I think we need to be thinking of it in exactly those terms, Maggie.
Yeah. I mean, Ash, when we think about the year, so geopolitical, we haven't even scratched some of the other, you brought a big macro headwind. This has been a really difficult year. I mean, we have people who come on who have been doing this for years. And I think all of them have said, this has been hard. This is one of the hardest macro environments they've been in.
Well, yeah, we saw the 60/40 portfolio collapse this year in terms of its ability to generate return with non-correlated assets. Suddenly, everything became correlated in the wrong possible way. And it's challenging. It's challenging for a lot of investors. It's challenging for a lot of folks who run money for a living. It's a challenging time.
Yeah, it is. And so, if we think about what's happening in the markets, I know I've been having this conversation. I'm sure you have too. Okay, where are we short term, and then what are we thinking about long term? And short term, there was, I think, we saw the equity market bounce off the lows, and people were sort of saying, oh, this seasonally, there's usually a strong time. We think we're going to be able to have some upside here. They always call it the Santa Claus rally, right? Just because in December, you have a lot of people who tend to sort of, want to keep up their performance and add to their winners, and you get this lift in the market. That did not happen this year. No Santa rally, at least not yet. I mean, technically the markets are open next week, but December was a terrible month for U.S. equities. And everyone seems, at least a lot of the people I talked to, seem like they're braced for a really tough beginning to 2023 for January. But what's been interesting these last few weeks, when you talk to especially the people who are traders or have a background as traders, their kind of spidey senses up. They're like, oh, everyone's so bearish. And Brent Donnelly, for one, has been saying the last couple times he's on, what if everyone's wrong? Have a listen to his reasoning. I've got to ask this question that just went in because, Paul, I feel you. Paul E. from our site. Does anybody have any good news to report? If so, please share it immediately. But I think it's a good question for you, Brent, because you're an opportunist. Macro traders are opportunists. So let's reverse this. Is there anything you like here?
So, I mean, the good news is that the US economy is still actually doing pretty well. The job market's doing well. And all these shocks, like even the foreign mortgage shocks and all that, are somewhat less extreme when you have a job, right? Like even if my mortgage payment doubles, if I'm still employed, I'm probably going to be able to scrape through. The real trouble comes when unemployment goes up. So I think the good news so far is that this isn't, like a major economic collapse. What it is more like central banks attempting to engineer a soft landing, and that's just like it's so difficult to do that barely anyone believes they can do it. But I mean, the good news is, I suppose, is that it's possible. I mean, the good news, I suppose, is that commodities have come off a lot. So, gas prices and that are not as bad. I wouldn't say that, like, I would compare right now a lot more. You had mentioned '08, but I would compare it a lot more to '01 than '08. Sorry, I guess the best news is probably that there's not that much leverage in the system as well. So what you have is more like a traditional bear market where companies go bankrupt and there'll be unemployment. Unemployment will go up, but it doesn't have as much of the feel of like a credit crisis, or like, so you could argue that the guilt thing and all that could lead to some kind of sovereign debt crisis. But the thing is, the G10 central banks can just intervene, and no matter how many gilts everyone wants to sell, the Bank of England can just buy them all and monetize all the debt. And yeah, there'll be unintended consequences, but the sovereign debt crisis in G10 to me is just basically not a thing. They can always they can competitively devalue the currencies and print currencies, and that will have impacts, but they're not going to default. G10 economies are not going to default. They'll just print. So, but the problem with that is that if that's the solution to a sovereign debt crisis, that's inflationary. So then you're not really solving the inflation problem.
Yeah,
And
this is where it gets tricky, but that's a great point about, the ability for them to handle this as opposed to when it's in an emerging market where, they're more constrained as to the levers they have. I love Brent. Okay, so this is interesting, Ash. I just want to say too, on that note about is everyone on the same way? For those who listened yesterday, not the same, but Jared Dillian brought up a similar point. He was talking about what's the pain trade? What's everyone in? What's so crowded that if the unexpected happened, everyone would just be, be on the losing side of that. And he, traders always look for that. Doesn't mean they think it's going to happen or what they know that they know the catalyst, but they're always trying to sort of look at the probabilities and see where things seem a little off in terms of sentiment. I don't know. What did you make of that, Ash?
Well, Maggie, you're absolutely right. The Santa Claus rally never came this year. I think that Santa got grounded by North Pole Air Traffic Control. There's literally been not a bump in it. December was a bad month across the board for U.S. equities. S&P 500 off about 6% on the month. But let's be honest, Maggie, it's been a bad year. S&P 500 down about 19% on the year. Nasdaq Composite down about 33% on the year. And if you look at the Nasdaq chart, especially, it's just an ugly chart. Look, here's where we find ourselves in the broader scope of things. So headline PCE right now is running at about 5.5% year over year. Core a little bit less, 4.6% year over year. And everyone and their mother is calling for a recession in 2023, except for Raul. More on that later. But this is a moment, I think, for just big picture thinking and trying to get a context and a sense of where we are. Look, if you zoom the camera out, and I think it's appropriate that we do so here on a year-end show, the country right now is terribly divided, regional, economically, generationally. Good luck separating your Uncle Joe from your 19-year-old niece, Dakota, who just returned from her first semester at Oberlin at holiday dinner this year. It's an incredibly divided and divisive moment. It's a moment that feels to me a little bit like the moment at the end of World War II where the status quo antebellum is gone, and we need to collectively figure out what comes next. Just a real quick anecdote from last night. So I had a conversation last night at the Real Vision Metaverse Christmas party with a software engineer who told me about the AI software ChatGPT.
Yes. Tell me, I'm obsessed with this. Tell me.
Yeah. It's fascinating angle on it. He told me it's going to revolutionize code audits for smart contracts in Solidity on Ethereum. Now, here's the point. If you're listening to that phrase, code audits revolutionized with AI for smart contracts on Ethereum, a lot of folks out there would just be scratching their heads. Look, here's the point. That's not the world that most people live in. If you're watching Real Vision Daily Briefing right now, you're probably already on the bleeding edge. You're probably one of the lucky ones for whom change is an opportunity and not a risk. Yeah. But a lot of people in this country right now are just not so fortunate. That's the challenge of where we find ourselves. Look, I'm not an especially deep thinker about central bank policy or the mechanics of monetary policy, but CBs right now need to solve for two opposite problems. Rates were held too low too long, as we heard in the clip. Inflation does, in fact, indeed seem structural. Real rates are currently negative by every measure. Fed funds rate up or bound now 4.5%, PCE at 5.5%. This is a really challenging time for a whole variety of reasons for the country. It's a challenging time for the economy. Where exactly the risk in financial markets may turn is a different question, but it really does feel like a challenging time for, I think, a lot of people, Maggie.
Yeah, no, you're right. And I'm really glad you pointed that out about, whether you have the luxury of seeing these things as an opportunity and the fact that a lot of people don't. It just puts their back up against the wall.
Right.
We've had some really, really interesting threads, but I want to stay in what you said about the central banks and the challenge for just a quick moment. So can the central banks fight inflation and maintain financial stability at the same time, right? That's the million-dollar question. That's kind of what people keep chewing over, these a lot of them veteran strategists, big macro thinkers who've been at this for a long time. This is the question they keep coming back around to. And a lot of them are skeptical, especially when you think about this big overriding issue of debt. of the
Right.
heavy indebtedness of a lot of countries. Diego Perea, in an interview we had, I think explained it so clearly. Let's have a listen to what he had to say.
I think this dynamic is tricky, is dangerous, but they are obviously showing their resolve towards inflation. I think they're correct in doing so. It's a super big problem. And I think there's some really big things happening here. One of them is the acknowledgement that perhaps negative rates or even zero rates was a big mistake. And I think looking forward, we should, and we may be in a world of positive nominal yields. The second question is, to what extent will these massive hikes break something and effectively create a recession that destroys demand and brings deflation, or at least reduces the level of inflation? I think that's quite likely as well. The big question comes, what's next? Are we going to be in a world where effectively real interest rates, nominal minus inflation, are positive as the market is predicting today? Or are we going to be forced to effectively do something and intervene to avoid the collapse? A little bit like what's happening in Japan, or what I think Europe is positioning for, which is, look, I'm hiking rates, but I have to have a contingency plan through yield curve control, which means I'm going to print even more to prevent the bubble in credit collapsing. And what this means, in my view, is inflation structural. It's going to remain very high, and therefore we're going to have deeply negative real yields for the foreseeable future. And this is a very significant change to what the market is pricing today.
Yeah, and what worries me about Diego is saying that whether you agree or not, you have to pay attention, because he's saying, listen, this isn't priced in. Like, people do not really have their head wrapped around this issue. And I think there are a lot of sort of seasoned macro investors who are like, hey, for a person who sort of understands this and can react, this might be an exciting time. But for a lot of other people, they just haven't seen this environment before, Ash.
Well, Maggie, I think you said it really well before that this is the million-dollar question, whether central banks are going to be able to balance out inflation and concerns over growth. It's actually like the $23 trillion question. And I think, in some sense, the fact that this is an opportunity for us to sort of zoom out and take a look at the big picture, that's a very tough equation to balance there. The reality is saying that, can central banks somehow moderate inflation while simultaneously supporting growth? It's kind of like saying, I want to run some water into the bathtub, but I want to make sure it gets warmer while it gets colder at the same time. I mean, these are kind of logically exclusive variables that are being solved for. And that obviously is a challenge. Obviously, we know we had 2 consecutive quarters of negative GDP growth earlier in 2022. This is really a significant challenge, I think, and it comes as we heard in that clip, precisely to the point that this is what happens when rates are held for too low for too long.
Yeah. It's something I know you've talked to with Raul a lot, this issue of debt. This is one of these big issues. Yeah. And Raul has always talked about debt being a massive problem, a massive overhang that's going to force difficult choices. He sees things differently. He's been contrarian to a lot of the people who've been coming on our air, as you hinted at before. He does think that massive debt problem is eventually going to force central banks to pivot, but it may not look like it did before. A different playbook. Let's have a listen.
There's a lot of people who think that the whole trend is reversed forever and rates are going to be higher. I don't believe that, but I understand the point of view. So I'm not saying they're idiots or anything. Everybody is trying to figure this out. It's been extraordinary times. I think this has just been a bullwhip from the pandemic, and things settle down. We go back to below trend growth and falling inflation. That's the most unpopular view in the world right now. Doesn't really matter, because that's a battle for 18 months' time. The next 18 months are slowing economies and falling prices. And opportunity, because a pivot has to come. And the pivot doesn't have to be a massive cutting of rates of quantitative easing. It just needs stopping of the rate of change of liquidity tightening.
That's really important. So because I think when people hear a pivot, they think, okay, we're going to swing right around to quantitative easing again. That's important. You're not talking about that. So what does a pivot look like to you?
A pivot looks like to me not tightening the balance sheet, so no QT. Rate of change goes to zero. So you've got a beach ball underwater, particularly with something like crypto or technology, which has adoption models. So over time, they always grow. I mean, things like AI, just relentless. They're not going to stop. EV, not going to stop. Space, not going to stop. All of this stuff. So the rate of change liquidity is like a beach ball holding it underwater. So the moment you just take your hands off, it bounces straight through. Now, quantitative easing is the wind that will lift it out of the water further. So a change of we're not going to tighten any further and we're not going to do any QT is going to bring ridiculous relief to markets, because markets hate uncertainty.
That's an interesting concept. Ash, what were your thoughts on that?
Well, my first thought was, this is why I love Raoul. This is a great contrarian take. I love the beach ball being pulled underwater. It's a great metaphor. Yeah. Look, there are concerns, I think, for macro reasons. Raoul makes the case for asset prices rising. Now, that may sound a bit counterintuitive, but it makes sense if you walk through his argument. So if there's below trend growth and falling inflation, central banks essentially have to pivot in whatever form that is. It may not be a radical, as you say, return to quantitative easing, but it could just be not doing the quantitative tightening, not doing the quantitative easing unwind, essentially holding the balance sheet flat. By the way, look at the S&P 500 chart. From March of 2020, the low, the darkest days I've ever seen in my life, to a year ago, last December, a year ago this month, December of 2021, what happened? The S&P 500 rose 100%. Why? The broader economy was turned into a wasteland, obviously by COVID closures, and asset prices doubled. That's the problem, for all the reasons I pointed to before, but particularly in this sense of inequality. You have this world where central banks are forced to act when you have a slowing economy, and it dramatically pushes up asset prices. And by the way, that increase wasn't just low base effect. In other words, it wasn't just the collapse of the S&P 500 in the wake of the crash in March. The S&P 500 was up more than 40% from its February highs through December of 2021. So Raoul is hitting on this critical difference between the broader economy and asset prices. You could see challenges for the broader economy, headwinds, pain, frankly, for workers, pain for people who are struggling during this time, while simultaneously central banks are forced to move in the opposite direction because they just don't have it's Maslow's hammer. They just don't have any other tools but to change some of the aspects of monetary policy that are within their purview. You mentioned debt at the top of the clip. Debt right now, on a debt to GDP basis here in the US, is at 120% of GDP, actually slightly over 120%. When Ronald Reagan was elected back in 1980, this is obviously the last period of substantial inflation that most people in our economy remember, it was 30%. So it's now 4x on a debt to GDP basis where we were in 1980. One quick note, if you want to get this sort of context and more argument in favor of Raoul's point, look up a gentleman named Arthur Burns, who was chairman of the Fed during that period, where they made the mistake of reversing too quickly when the economy began to contract and they began to cut rates again. They began to continue. They failed to follow through on their inflation regime of pushing it down, and they began to take the wrong action too soon. This is a mistake that they've learned very well at the Fed. This is precisely the challenge we're in right now. This is why we're between a rock and a hard place, and that really is, I think, just a brilliant sort of framework by Raoul for how you could see problematic issues in the economy more broadly, and yet asset prices rising because central banks have absolutely no choice but to retreat.
Yeah, no, it's going to be a really difficult road. We have a question from Paul E. for both of us, and that is, if you had to name one or two must-see RV videos this year, what would they be? We both laughed because Brian told us it was there, Paul, in the clip, and we were like, oh my God, how can we choose? How can we even remember? We've had so many great conversations. But Ash, I'm going to kick it off because it took me a minute, but then my brain started going. And there are so many. It's very, very hard to choose. And I'm sure the minute we end the show, I'm going to think of 10 more. But some of the recent ones that I keep thinking about and I keep rewatching myself, Paul, Russell Clark and James Helliwell had one. You have to be a member, guys. These are all on the platform. So join. It's not too late. Christmas gift if you're a procrastinator. James Helliwell had a conversation on December 9th. rocked my world. Really, really interesting stuff from Russell. He's completely changed the way he looks at the world, and makes some really compelling points. Felix Zoloff, Raul just did something with him. We dropped it December 16th, if that helps you look. Little depressing, I'm not going to say. He's very concerned, but that was a really fantastic one. I did a conversation with Denise Schull. If you're stressed out or you're trying to think about how you trade, she's amazing, as always. That one was in November. Optimizing investing for top performance. It was part of our Don't Wait for January. That was really fascinating. She was a performance coach, works with a lot of hedge fund managers. She's a character Wendy from Billions is based on, and she always just drops some amazing intelligence and perspective when we talk to her. And one last one, Emad, I'm going to say his name is Mustoke. Is that it? I don't know. Ash, you may know him. This is on Raul's crypto side of things, but he did a conversation with Raul in October on AI, and especially based on what Ash was just saying about Chat GPS. You have to watch this video. It is going to blow your mind. Maybe make you really scared, maybe make you feel really optimistic, maybe a little of both. But it was really eye-opening for me. So those are a couple of my favorites. Ash, what about you?
Yeah, at very least, it will surprise you to see just how much progress AI has made in the last 2 years. Is pretty astonishing. For me, again, Maggie, is exactly the problem that you had. It's hard to pick one of your favorites here. But look, on the crypto side, where I'm spending most of my time these days, we're doing Real Vision Crypto Daily Briefing every day at noon Eastern Time. And I think we've been covering what's been happening in those markets very closely. FTX collapse, obviously, but also some of the things that people are looking for where the next shoe to drop might be. Right now, there's some challenges over at Binance. There's some challenges over at DCG Genesis. These are very big shops. Again, impossible to say where that's going to head next. Don't want to imply that there's going to be another substantial problem there, but these are where our eyes are. We've been doing this, throughout the week and throughout the last several months. Just did a show with Dan Roberts where we wrapped what had happened this year. I think that's a really good summary. Eli Ben Sasson from Starkware came over, and we're just doing this show every day, Maggie, with Nico, Marco, Elaine, Jeremy, Paul, Moritz, Santiago, the whole Real Vision crypto crew. If you're not watching that show, please go check it out. It's free. It's on YouTube. It's on the Real Vision platform as well. And then one other point that I would make in terms of shows, I think the Real Vision Crypto Pro show that we're doing right now with the folks who are joining us there is also very strong institutional grade content. If you're not a crypto Pro member, you should consider signing up if that's something that interests you. But we're really doing, I think, a very granular dive deep into that, digging in with the folks from Delphi Digital who have been just fantastic partners with us on
and
that
listen,
show.
It's been rocky, right? It's been the crypto winter, but this is the time where you want to pay attention and make sure that you understand all asset classes. That's what I'm doing. You can't just know what you know. You have to make sure that you're across everything so you can understand it, whether it's something you want to invest in or whether it's a risk. Right? These things are all interconnected. The other thing we should shout out is the Academy too. If you haven't checked it out, depending on where you are in your learning journey, we're going to be adding to that, which I'm super excited about. Ash, as we wrap it up, anything that you're excited about? We got this asked this question. I'm excited about more meetups, more in real life opportunities to connect with the community. What about you?
Yeah, I had a blast at our meetup here in New York, and obviously it was amazing going down to the Cayman Islands, getting to hang out with our subscribers. Just incredible. I love what we do. I love being able to do this remotely, but it's also a lot of fun to meet people in person. So I'm super excited about that too. And I think just to continue watching what's happening in these crypto markets, where I'm spending probably 80% of my time, this is an incredibly interesting moment. It's an inflection point. If you're looking at this right now and thinking, why do I want to learn about crypto if it's something that seems to be having so much trouble? I think the answer is because this technology is here to stay. And we're going through a rough patch right now. But come and join us. You'll be an OG when the market recovers.
It's not too late to be an OG. That's what they keep telling me anyway. And
never too late to be an OG.
Hey,
listen, Maggie, one of the things that informs my view of crypto is when I was one of the young guys on Wall Street back in, the late 90s or the year 2000, I remember when the dot-com bubble imploded. And I remember old guys who were probably younger than I am right now clapping a hand on my shoulder and saying, hey, that internet thing was really cute, kid, but what are you going to do with the rest of your life? The reality is that when technology reaches a certain level of critical mass, the valuations can sometimes get out of whack. They can sometimes not match the cash flows. But once the train has left the station in terms of the technology, once the best and brightest and smartest people in their generation, young technologists, are thinking about it and they're passionate about it, it just continues to build momentum, sometimes quickly, sometimes more slowly. But this technology is technology that's here to stay, Maggie.
Great stuff. Well, we listen, most of all, Ash and I both really appreciate all of you for joining us every day at 4. We hope we're helpful. This is all about power, right? Information is power, and we need to make a lot of decisions. And I think it's going to get a little harder to do that. So in any way we can help, we're grateful for the opportunity. We are not going to be live next week. This is our last live show for 2022, but we will be replaying some other great stuff that's been on the platform that you may not have been able to have access to. So enjoy it all. And we will see you back here the very beginning of January 2023. We all better strap in.